Did you know that in the first quarter of 2025, over 120,000 Australians lost their jobs? And that's just the beginning? Mortgage defaults have surged by 32%, and small businesses are shutting down faster than they did during the peak of COVID-19. The headlines may seem scattered, but when you connect the dots, a chilling picture emerges. Australia could be heading for its worst economic collapse in decades. What's causing this massive disruption? Is it just bad policy or something deeper and more dangerous? Experts are warning that we may be facing a perfect storm of financial triggers: rising interest rates, collapsing property prices, and a cost of living crisis that's spinning out of control. And here's the kicker: you might already be at risk without even realizing it. In this video, we'll break down the 10 most alarming reasons behind this looming collapse, and more importantly, show you how to stay ahead of the fallout. Let's dive in. Number 1. Skyrocketing interest rates. If you're feeling like your money isn't going as far as it used to, you're not imagining it. One of the biggest pressures behind Australia's economic downturn is the sharp rise in interest rates. In just 18 months, the Reserve Bank of Australia has raised rates more than a dozen times, reaching levels we haven't seen since the early 2000s. For millions of Aussies with variable rate mortgages, this means hundreds, sometimes thousands, of extra dollars each month just to keep a roof over their heads. But the damage doesn't stop with homeowners. Business loans, car loans, credit cards, all of it becomes more expensive. Small business owners, already battling high overhead costs, are now being crushed by rising repayment demands. Many are forced to lay off staff or shut down entirely. This leads to a dangerous domino effect: less employment, less consumer spending, and a slowing economy that feeds on its own collapse. Think about it. How can a family survive when their mortgage jumps from $2,500 to $3,800 a month practically overnight? How can a cafe stay open when loan payments double but foot traffic drops in half? These aren't theoretical problems. This is real life for thousands of Australians right now. And if the trend continues, it could push the entire nation toward a full-blown financial crisis. Interest rates aren't just numbers. They're the silent wrecking ball tearing through Australia's economy in 2025. Number 2. Housing market bubble burst. For years, Australia's property market was seen as unshakable, a goldmine where values only went up. But in 2025, that illusion is shattering. After years of relentless growth, house prices have started to plummet in major cities like Sydney, Melbourne, and Brisbane. In some suburbs, prices have dropped by over 20% in just 6 months. What once felt like a safe investment is now turning into a financial nightmare for homeowners and investors alike. This sudden crash is the result of multiple pressures colliding. As interest rates soar, mortgage repayments become unaffordable. Buyers retreat and demand dries up. At the same time, desperate sellers flood the market, driving prices down even further. Negative equity, where your home is worth less than your mortgage, has become a painful reality for many Australians. Families who stretched their budgets to buy in are now trapped, watching their biggest asset lose value by the week. But the consequences go beyond individual pain. The housing market is a pillar of the Australian economy, and when it collapses, it sends shockwaves through construction, banking, retail, and consumer confidence. Developers are halting projects, banks are tightening lending, and everyday Australians are holding back on spending, worried about what's coming next. This isn't just a price correction, it's the bursting of a long inflated bubble, and it's dragging the entire economy down with it. Number 3. Unemployment spike. One of the clearest signs of a collapsing economy is the rise in job losses, and in 2025, Australia is experiencing exactly that. Unemployment has surged to its highest level in over a decade, with industries like retail, construction, tech, and hospitality laying off workers at an alarming rate. More than 120,000 jobs vanished in the first quarter alone, leaving thousands of Australians scrambling to make ends meet. This isn't just a numbers game, it's personal. Behind every job loss is a family struggling to pay bills, a graduate unable to start their career, or a skilled worker forced to take casual gigs to survive. The ripple effect is brutal. With fewer people employed, consumer spending drops, businesses earn less, and even more jobs are lost. It's a vicious cycle that feeds the very collapse we're trying to avoid. The emotional and mental toll of this insecurity is growing, leading to increased anxiety, depression, and social unrest. And the worst part, many of these job losses are structural, not temporary. Automation, outsourcing, and the collapse of small businesses mean that some roles may never come back. Australians are being urged to reskill and adapt. But that takes time. Time we might not have in an economy spiraling downward. This spike in unemployment isn't just a consequence of the collapse. It's also fueling it, accelerating the downturn and pushing more people to the edge. The workforce that once powered Australia's growth is now being sidelined in one of the darkest job markets in recent memory. Number 4. Declining consumer confidence. Confidence is invisible, but when it disappears, the effects are unmistakable. In 2025, consumer confidence in Australia has hit rock bottom, with surveys showing that people are more pessimistic about the future now than they were during the height of the pandemic. And when confidence drops, so does spending. Households cut back on non-essentials, hold off on big purchases, and focus purely on survival. The result? A dramatic slowdown in the economy from the ground up. Businesses, especially in retail and hospitality, are feeling the heat. Shops that once thrived are now half empty, and services that rely on consumer engagement, like gyms, cafes, and salons, are struggling to stay afloat. People aren't just spending less, they're also saving more, worried about potential job loss, rising bills, and an uncertain future. It's a defense mechanism that's completely understandable, but one that's adding pressure to already struggling industries. And this fear is contagious. When people see their neighbors tightening belts or hear daily news about economic doom, it creates a national mood of caution and restraint. This decline in spending sends a clear message to investors, businesses, and banks. The people have lost trust. And when trust vanishes, the economy freezes. Consumer confidence isn't just a statistic, it's the heartbeat of the economy. And right now, it's dangerously weak. Until Australians feel safe, secure, and hopeful again, recovery remains a distant dream. Number 5. Supply chain disruptions. You've probably noticed it. Empty shelves, delayed deliveries, and price tags that keep climbing. Australia's supply chains are in disarray. And in 2025, these disruptions are no longer a short-term hiccup. They're a chronic crisis. With ongoing global shipping delays, labor shortages, and escalating geopolitical tensions, our access to essential goods has become both unpredictable and expensive. From fresh produce to electronics, the delays are longer and the costs are higher. Australia's heavy reliance on imports is now a glaring vulnerability. A large portion of our food, medicine, clothing, and consumer electronics come from overseas. But with key trade partners like China imposing export restrictions and global logistics networks under strain, Australia finds itself at the back of the line. And when we do get the goods, they arrive with inflated prices that hit the consumer hard. This isn't just inconvenient, it's a serious threat to economic stability and public morale. The impact? Small businesses can't stock products. Supermarkets are limiting items per customer. Families are paying more for less. These disruptions ripple through the economy, stalling production, raising costs, and feeding inflation. It's not just about shortages, it's about a system that's no longer dependable. Until Australia diversifies its supply routes and invests in local manufacturing, we remain dangerously exposed to global shocks. And every delay, every shortage, every price hike tightens the grip on an already struggling economy. We'd love to hear from you. Have you experienced any of these signs in your area? Your stories help others realize they're not alone. If you found this video helpful, smash that like button and please consider subscribing. It's just one click, but it means the world to us and keeps this content alive. Number 6. Soaring national debt. Australia's national debt has quietly ballooned to record-breaking levels, and in 2025, the pressure is starting to show. After years of stimulus packages, emergency spending during the pandemic, and major infrastructure projects, the government is now facing a debt bill that's nearly $1 trillion. That's more than ever before in our history, and it's growing by the day. While debt can be useful in tough times, carrying this much weight during a fragile economic period is like trying to swim with concrete boots. The real danger lies in what it means for everyday Australians. As debt piles up, the government has fewer options. They either cut public services, raise taxes, or borrow even more, none of which are good for a slowing economy. Already, we're seeing whispers of reduced healthcare funding, education cuts, and infrastructure delays. At the same time, tax burdens are creeping up, slowly draining household incomes already stretched thin by inflation and job insecurity. And here's the kicker. If global credit agencies lose faith in Australia's ability to repay, interest rates on our debt could spike, pushing us into a full-blown debt crisis. It's like maxing out a credit card, then being told your repayments have doubled overnight. Debt isn't just a government issue, it affects all of us. From public services to the value of the Australian dollar, a nation drowning in debt becomes less stable, less predictable, and more vulnerable to collapse. And if action isn't taken soon, this silent threat could explode into the loudest disaster yet. Number 7. Declining real wages. It's one of the most frustrating feelings, working harder than ever, but getting less in return. That's exactly what's happening to millions of Australians in 2025. While wages might appear to be rising on paper, the reality is far more grim. Once you factor in inflation, the real value of what people earn is actually falling. It means your paycheck buys less fuel, less food, less electricity, and far fewer opportunities for your future. This isn't just an economic inconvenience, it's a major warning sign. When real wages drop, so does the standard of living. Families that once felt comfortable are now tightening their belts, skipping family holidays, downsizing homes, or even turning to food banks. The middle class is shrinking, and more Australians are slipping into financial distress, despite being fully employed. It's not just about earning money, it's about whether that money holds any real value in today's economy. And the worst part? There's no quick fix. As long as inflation outpaces wage growth, this downward trend will continue. Businesses claim they can't afford raises due to higher operating costs, while employees struggle to cover even the basics. The result is a growing disconnect between work and reward, leaving many to ask, what's the point of working harder if it only makes you fall further behind? This silent wage erosion is one of the most dangerous symptoms of the broader collapse because it kills hope, one paycheck at a time. Number 8. Failing small businesses. Australia's small businesses are in crisis, and it's not just bad luck, it's a full-blown collapse. Once the backbone of the economy, local cafes, tradies, family-run stores, and independent service providers are now closing their doors at a record pace in 2025. With rising rents, surging supply costs, shrinking customer bases, and high-interest repayments, many can no longer afford to operate. And when small businesses fall, entire communities feel the hit. These aren't faceless corporations. They're the local butcher you've visited for years, the bookstore that sponsors local kids' sports, the mechanic who knows your car better than you do. As they disappear, so do jobs, neighborhood character, and economic diversity. In their place, we're seeing growing monopolies where only big chains survive, offering fewer choices, higher prices, and less personal service. The human cost is staggering, with countless dreams crushed under the weight of financial pressure. And the ripple effect is even more devastating. When small businesses shut down, it's not just the owners who lose, it's also the staff, the suppliers, and even nearby businesses that rely on shared foot traffic. Entire districts start to look abandoned, creating a visual and emotional sense of decline. This wave of closures isn't just an unfortunate side effect, it's a central piece of the collapse puzzle. Without bold support or reform, Australia's entrepreneurial spirit may never recover. And that would be a loss far deeper than dollars and cents. It's the death of local resilience, one shuttered storefront at a time. Number 9. International trade pressures. Australia has always depended heavily on global trade, but in 2025, that dependence is starting to feel more like a trap than a strength. With rising tensions between major world powers, shifting alliances, and unpredictable global policies, our biggest trading relationships are under serious strain. Countries like China and the United States, once reliable partners, are now placing restrictions, tariffs, and barriers that are hitting Australian exports and imports harder than ever. Take agriculture, for example. Australian farmers have faced sudden bans on meat, wine, and grain exports to key markets, often for political reasons rather than economic ones. In return, we're paying more to import machinery, electronics, and even raw materials vital for manufacturing. The costs are going up and the profits are going down. It's squeezing local industries from both sides, making it harder for them to survive, let alone grow. And the bigger issue, Australia has yet to diversify its trade portfolio. Relying too heavily on a few global giants leaves us vulnerable when things go south. In a time of economic collapse, this kind of fragility can tip us over the edge. We need more self-reliance, more local production, and stronger ties with a broader range of partners. Otherwise, every global conflict, policy change, or trade war turns into an economic earthquake right here at home. This isn't just bad business, it's a dangerous gamble, and we're running out of time to fix it. Number 10. Climate crisis and natural disasters. It's no longer just a prediction. Climate change is here, and Australia is feeling its full force. In 2025 alone, we've seen record-breaking floods in Queensland, devastating bushfires in Victoria, and prolonged droughts crippling farmers across the country. These events aren't spaced out. They're overlapping, relentless, and destroying critical infrastructure, homes, and livelihoods. The financial cost? Billions of dollars in damages. But the real cost is the long-term impact on our economy's core foundations. Natural disasters are becoming more frequent and more severe, forcing the government and insurance companies into a financial corner. Insurance premiums are skyrocketing, especially in high-risk areas, making coverage unaffordable for many Australians. In some regions, providers are even pulling out completely, leaving families and businesses unprotected. Meanwhile, rebuilding efforts are slow and underfunded, and communities are being abandoned. These events are draining public resources, disrupting supply chains, and driving people away from once thriving areas. And this isn't just a series of unfortunate events. It's a compounding crisis. The damage from one disaster isn't repaired before the next one hits. Agricultural exports are suffering, tourism is declining, and entire towns are teetering on the edge of collapse. Australia's economic vulnerability to the climate crisis is now undeniable. Without major investment in climate resilience and sustainable infrastructure, these disasters will continue to erode our national economy, one storm, one fire, and one flood at a time. In the end, ignoring climate risk doesn't save money, it guarantees collapse. The signs are everywhere, from empty storefronts to overwhelmed hospitals, rising rents to raging floods. Australia's economy isn't just slowing down, it's cracking under the weight of multiple, interconnected crises. From skyrocketing interest rates and a burst housing bubble to mass layoffs, supply chain chaos, and climate disasters, the evidence points to one undeniable truth. We are living through one of the most critical economic turning points in modern Australian history. But awareness is the first step toward action. Understanding these 10 root causes gives you the power to prepare, adapt, and protect your future. Whether that means reassessing your finances, reskilling for a shifting job market, or supporting local businesses, every choice matters. The collapse isn't coming out of nowhere. It's been building for years. And while we can't control everything, we can choose how we respond. So the question isn't if the economy will change, it's what you'll do about it. Will you watch from the sidelines, or will you stay informed and take charge of your financial survival? Stay sharp, stay aware, and remember, knowledge is your greatest shield in uncertain times.